Okay, well, I think we can kick off very soon, about a minute to go, and we'll get things going. I should actually just do, most of you know me, but if you don't know us, we are based in Australia. We're an ASIC licensed company. Myself, I focus really on the FTSE 100, and my trading partner Cameron, he's focusing on Australia, US, and German markets. Over 30 years combined trading experience, and we've been around teaching and trading live with our clients for over a decade now. So a long time doing this, guys. Being on various TV programs as well. So if you go on the internet, you'll see lots of information about us over the last decade. If you don't have the free Telegram channel, I will just post this to you now. You definitely want to get the free Telegram channel, because we give away lots of free stuff there, and sometimes we give away some free trades. We let you know about hot topics, like at the moment we're discussing Bitcoin and why we're interested in that at the moment. So definitely join the free Telegram channel if you are not in that one. I'm just going to post the link now to everyone. That's now in the webinar chat for the free Telegram channel. As I said, you want to get involved with that one if you don't have it. It's a no-brainer. Okay. Still people joining. So if you just joined, we just gave a quick intro, but I posted in a free Telegram channel where you can get access to lots of our trades and hot topics. If you don't have that, please join the link in the webinar chat room for that. Right, I just want to now change the screen and go to a chart for you. This is a cash chart. So the first thing I want to note on this chart is that I do all my analysis on a chart which is cash based. What do I mean by that? Well, you can have broker charts like Go Markets, IG Index, Pepperstone. There's hundreds of brokers around the world, but I never do any analysis on them because the price feeds run 24 hours a day. Therefore, the actual price levels and highest and lowest prices, and also the closing price of the market, is very different to the actual cash market. So on this screen, you'll notice in the bottom right-hand corner that it actually says the market is closed. So if you were on a broker chart now, the market would be open and you'd be seeing a very different price to this. But yesterday, the FTSE closed at 74.96. Okay, and that's going to be quite relevant at the open, because I actually do feel the gap will fill today, or at least 50% of this level will fill, which means that if we open above 74.96, I'm expecting the market to come on down to 74.96. At the moment, the FTSE is trading at 75.18 on the broker charts. So it's trading at 75.18 with the broker chart. So there's about a 20 to 23 point gap at the moment on the FTSE. Again, if you've got any questions on this, do let me know. The gap is basically where the FTSE closed yesterday, because the FTSE and the DAX and all the other index markets in the world, they do close at a specified time. On the FTSE 100, it closes at 4:30 UK time. And always get your closing price from a real cash market. Never get the closing price from a broker chart. It's wrong, because it doesn't include an auction period. So it's very likely the trade today will be looking to sell the market down to 74.96, guys. All right, that'll be something that we'll be focusing on at the market open. Now, yesterday, if you're in our programs, if you're in this room, you're not in our programs, but basically what we were doing is we were looking to sell the market above the previous highest price. So last week's highest price on the FTSE 100 was 75.23. Now, if you go back a week earlier than that, so the Monday before that, we also did the same thing. We opened above the previous weekly high, then we sold off. And if you go back another week, you'll also see that we opened above the previous weekly high on a Monday and we sold off. So this is a pattern which we took advantage of yesterday. We waited for this move up to resistance at 75.50, and then we were telling our clients to sell on a break back below 75.23, and the lowest price yesterday got down to 74.70. So a nice little trade there yesterday. It also ties in with market function. What is market function? Well, market function is what's happening behind the scenes. It doesn't include technical analysis or fundamental analysis. What I know from all my experience is that during expiry week, which I'm going to cover in a minute, the markets tend to be range bound. So if you see an early breakout on a Monday to the upside or the downside above the previous weekly high or low, it often fails because the markets often break out after expiry, but before expiry, which is on Friday, the markets tend to be in a range, they trade the range, and you don't see big breakout moves. So again, that was another reason that we bolted into yesterday's reason to sell, was the fact that market function was telling us that FTSE is likely to be range bound. And I'm going to use that information today as well for the closing gap, because I view that the FTSE will likely be in a range-bound environment this week, not a breakout environment. There's a good chance the closing gap will fill down at 74.96. Are we all good, guys? Any questions on that? Sure, there might be a few questions. Sometimes I start talking trading jargon. So if there's anything you're not understanding, don't be shy. I'm not going to mention your name. I just want to make sure that you're understanding what I'm saying. So that was yesterday. And again, today, as I said, we'll be using the fact that I think we're going to see a range-bound market this week to target 74.96. Let me just check. Some questions coming through. So Kaz, what we're saying is that it's expiry week this week, and that often is a range-bound environment. So often you're not going to see the market break out above the previous highest or lowest price. It often breaks out and fails. It's not a sustainable move, and that's exactly what we saw yesterday, and we capitalized on it. And today we're going to be using the same market function principle around that. Now, let me go to a different screen now and just discuss the market function. So just by the way, if you just joined, because I can see a lot of you are late today, there's a free Telegram channel app, which if you're not on, you just need to get involved. I posted the link in the chat box. So just get the chat box, look in the chat box, you'll see that link. And if for any reason you can't, we've had a few people saying that they can't add this. So if there is any issue, just email our support and they'll give you the instructions. But it is a relatively simple process to add the free Telegram channel. Okay, let me just talk to you about expiry then. So expiry, I mean, it is my favorite trade. I've been I've been trading the FTSE since I was 22 years old. I actually started working for an investment bank, and I had the Bloomberg terminal switched on all day. So I actually looked at the FTSE price feed. Well, for over 20 years now, I've been looking at the price feed on the FTSE. But one of the trades on the FTSE I really love is expiry trade. It's a trade that I discovered, and I wrapped a system around it, and I've been trading it for over 15 years. It did take me a number of years to discover it, but it is an exceptional trade, which sets up every month and has an over 80% win rate in that period of time. And we've been trading it, well, it's actually well over 6 years now with our clients. And we trade it live as well. So it's very much a lifestyle trade that if you don't have any time, or you're not interested in day trading, but you want to just make some extra money on the side each month, this is ideal, because I can tell you we're going to trade this. We're going to go into a live room on Friday at 10 past 10, and we're going to trade for about 10, 15 minutes. And then next month, we're going to do the same thing. And then next month, we're going to do the same thing. So we're going to do it for 12 calendar months. We do this. And the system rules you basically get, and you can use them for a lifetime. What I really like about this is it's recession proof. It works in a bullish market or a bearish market. So if the market's positive, it works. If the market's negative, it also works. It has no bearing on technical or fundamental analysis, which is fantastic. And also, you don't need to guess market direction with this. This trade has got nothing to do with you trying to work out, well, is the market going to go up today, or is it going down, or is it going to hit a key level, or is, there's none of that. You simply apply the simple rules to this on a Friday. It's the third Friday of each month that we do this. And yeah, it's an exceptional trade. The premise of this trade is what's going on in the option market. Now, we're not trading options for this. We'll trade the normal CFD contract or spread bet if you're in the UK. But at 10 past 10 UK time, every third Friday of a calendar month, options will expire, and it creates a dramatic move to the upside or the downside, which we're basically going to fade. Fade means if it's moving up or down, we're going to trade it back to the point of origin. That's the premise of the expiry trade. We're taking advantage of an imbalance in the market where no buyers and sellers have been matched up. And that's why it works so well, because markets exist in the first place to match up buyers and sellers. That's why they exist. So when this is happening for this 5-minute period every third Friday of the calendar month, during that 5-minute period, no buyers and sellers have been matched up. And it's really why this trade will and has standed the test of time. It's not like this is a system that, is based on price action. It's going to phase out over time. I mean, I've seen so many systems come across my desk over the years based on price patterns and key levels, and if the market's going to move 10 points this way or that way. They all phase out, guys. I mean, you can go for a period of time where it works, but then it's going to hit a drawdown period. This one although it's a system trade, it just doesn't phase out, because it's not linked really just to price. It's linked to actually why the markets exist in the first place. And that's really why I love it. And I'm certainly not a trader where I'm just stuck to my screen all day. In fact, actually, I hate looking at the price charts all day. It might sound really weird. I'm a trader, but I really find nothing more boring than sat at a screen all day looking at price patterns. If I had to do that to make money, I wouldn't be a trader, because for me, I just find it very boring. So over the years, I've really found high probability trades and optimal times to look and trade the market that make money rather than just have a computer screen and sit down for 6 hours a day. There's no interest for myself doing that. Maybe you feel the same way, or maybe you've done that. For me, doing that, it's highly stressful and it's not healthy. So again, that's another reason why I love the expiry event. It's very much a pure lifestyle trade. So let's look at some examples of this, and we'll look at what happened last August. So we got a quick spike up in November on this one. It can move to the upside and the downside. I can't give you the system because it's proprietary, but you will be able to get access to it at the end of this presentation. But basically, the move has moved up on expiry here, and we've sold it in this example. And what's happened is it's moved all the way back down. The system will tell us exactly when to get in, and the system will tell us exactly where to put our stop for risk purposes. Because again, this trade, although it wins 20% of the time, 80% of the time, 20% of the time it will fail. So of course we need to have a stop. In the next example, this is just last month. Again, I don't want to cherry pick and go back. I know lots of people out there, they'll go back and find you a trade from 2020 and say, oh, look at this perfect trade. I generally just take the month before because it works. So in this example, at 10 past 10, the market has moved down during expiry. We've got the buy signal, and we've targeted back up to expiry. August is actually a very quiet month for expiry because there's not many options expiring. So in this example, I didn't risk as much. I only went in $100 on this one, but I made a quick $1,000, just under $1,000 on this trade. And again, this is just 10 minutes out of my life each month on an 80% win rate trade. There aren't many things in life that you can hang your hat on, especially in trading, which have 80% win rates. You can trade it at a set time and it doesn't take much time. In fact, try and find me something that has all these variables in it. I would be amazed. So that was last Friday, last August, guys. And we're going to have the next expiry on Friday. So it's going to set up this Friday at 10 past 10. We're going to be trading it. If you get involved with this, you'll get the full system details, but you'll also trade this in a live room with me every month for the course of a whole year. But of course, you have the rules for life, so you can do this for the rest of your life. And as I said, it's a great way to make some extra cash. So in summary, it's a market function trade. Get rid of your fundamental analysis and technical analysis. We're not interested in that on this trade. Pure market function. It trades once a month. It has an over 80% win rate. Easy to execute, easy to understand. Been trading it many, many years. Recession proof. And the final thing here, the banks can't take advantage of this. And that's why it still really works well, because there's not enough liquidity in this market. I can get up to around $400 to $500 a point on this trade after that. And that might sound a lot, but again, sometimes the expiry move is not that big and the stop is not that big. But yeah, above sort of $500 a point, you start to get some slippage, and it's not as easy to come out of the trade. So if you're thinking of going, oh, I'm going to trade $1,000 or $5,000 a point on this, your limit's around $500 a point. A point, not for the trade, guys. I'm saying every point the market moves, you'll make or lose $500. That's if you want to trade big size. So I'm going to come back to this because the market's going to open. But as I said, if you're interested in this trade, let me know, and I'll give you a link at the end of this this webinar. And basically you can subscribe, and you'll get the rules before Friday, and you can trade this live with me. It's also triple witching on Friday, so that's a really good event. We have options and futures expiring, so often the expiry is quite big. So there's greater chance of making a bigger amount of money. As I said, last August, just gone, it was a small expiry, but September is often a big expiry. So looking forward to it. All right, let's go back to, I just want to go back to the market now, guys, because FTSE is going to open. So if you get your screens up, guys, you'll see the FTSE's trading around 75, 16 to 18 at the moment. What we want to see is you can either sell the open with a 25-point stop, or you can wait for a 12-point move up, 10 to 12-point move up to sell, and then have a 25-point stop. Okay, so we're targeting down towards 7,500. The market has just opened. So again, we're expecting the market to trade down to at least 7,500 at some point. Ideally, we get a bit of a spike up to make sense of the risk reward. Let's see. I'm going to change my screen as well so you can see the price action on a different feed. But again, we're expecting the FTSE to trade down to 7,500 today. Let me go to a 5-minute chart. Okay, so we're getting a bit of a spike that's happening here. So again, a 10 to 12 spike is good. You have a 25-point stop, guys, and we're targeting 7,500. If you've got any questions on this, let me know now. Let me know now for this gap trade. Again, the reason we're waiting for the spike up is to balance the risk reward, because again, if you've got a 25-point stop, then when you've got a 10-point target, it doesn't make sense. So that's the point of waiting for the spike up, the 10 to 12-point spike up to get the risk reward in line. So we have just seen a bit of a spike up here, guys. %15 ATR today is 12. So it is 12. So we'll keep an eye on this one. As I said, it's a 25-point stop from your entry. And we're looking for this to go back down to 7,500. Right, a couple of questions are coming in for me. How do we identify when expires? It's every third Friday of the calendar month, guys. So it's going to the third Friday of this month is going to be the third Friday is going to be on Friday this month, so September. It's the 15th of September. This is basically set up. Sorry, I'm trading as well. I'm trading and trying to teach you at the same time. All right, this is a nice spike that is fading and coming back down. And also, as this moves down, you can take half profits and pay for a stop above here if you wanted to. If you want to reduce your risk, you can take half profits and use half the profit to pay for the stop above the spike. So what I mean by that is if you sold $10, as it moves down, you can close $5 out. And that 10 points that you've made, you basically put 10 points added on to the highest price here. And that gives you basically a free trade. So it means that if the market moves up 10 points above this spike, you're not going to lose anything. Does that make sense, guys? I do this a lot in my day trading is take half profits and pay for stops. Again, if it's not making sense, please let me know. Again, we're expecting the market to come back down to 7,500. We have our 25-point stop from our open price, but as it moves down, you can take half profits to pay for a stop. So you cannot lose on this trade. You're all very quiet. I don't know if you've taken this trade. I don't know what you're doing, but let me know if it's making sense. I can cover this trade at the end again if you want, if you're not understanding. Rosalind is concentrating. Okay, good. No, my screen is not blank. Dennis is saying I've got a blank screen. Pretty sure it's up there, guys. Okay, good. Marcus is taking half profits. Nice one, guys. Cool. Diane's concentrating as well. Okay, cool. Right, while we're waiting for this, let me put that I'm just gonna post that link for expiry, and I know some of you want that. So basically on Friday I'll be doing the same. You know, it'll be a similar room like this. We'll trade live with each other, and yeah, you can make money live with us. So I've just put the expiry product link in there. There's actually a video within that. There's another presentation on that landing page. You can watch it. It gives you a little bit more information about expiry. And there's a video of us actually trading it live. So you can watch that at your leisure. I don't know. It says Jay here, but he's saying it's not Friday, so should we be taking this trade? So this trade I'm doing with you now is totally different to expiry. This is a this is a gap trade, so it's very, very different. What I was teaching before is just the expiry trade. So what I'm doing now is different. So the link, Dennis, is in there. I've just posted the link. John, if you can't take half profits, you need to speak to your broker. You should be able to close out half your trade. I'm not sure why you can't. So definitely be taking half profits on this. For me now, I wouldn't allow this trade to go negative. So basically the money you've locked in from selling the spike or whatever you've done, we now move that above the spike here. So if you've locked in 8 points, put your stop 8 points above the highest price. If you've made 6 points, put it above 6 points. If you've made 12 points, put it 12 points above. I wouldn't want this trade to turn into a losing trade now. But we also need to give it a little bit of bit of room as well. So these trades, the gap trade is nowhere near as high probability as expiry trade. It's a very, very different trade. It's based on the previous day's closing price on the FTSE, but I use a selection process for the gap. And today it identified it as worth selling. So it did identify worth selling and targeting the gap today. But it is different to expiry for sure. Right, while we're watching this mundane price action, let me know if you've got any questions. Maybe you're new to trading. As I said, what I was telling you at the beginning of the presentation is that I don't like to be sat in front of those trading screens all day long. I like to trade at optimal time. So I generally like trading at the open. I like trading gaps. I trade market function events like expiry. And I'll put alerts in my broker for major areas in the market where I may want to sell or buy. But I'm certainly not just glued to the screen all day long. Jason's saying, what is your direct email? My direct email is mark@magnetictrading.com. So mark@magnetictrading.com. The link to expiry I put in the webinar chat to everyone. So you can save that. I also put a link for Telegram. So the numbers have gone up for this event. So again, if you don't have Telegram, you can join our free Telegram channel. In fact, I encourage you to do that. We posted a big presentation on Bitcoin, and why we're interested in Bitcoin at the moment, which I strongly advise you watch, because you may be missing out on a big opportunity that's happening over the next year. And I've outlined all the reasons for that as well. Tammy's asking, is the strategy for gap trading different to expiry trade? Yes, it is. Although the way this trade's set up today, it's fairly similar, because actually today I was saying, to get the risk reward correct, we were selling a spike up. So this is a sort of action you may well see during expiry, is these quick moves up or down. And then, yeah, we're expecting it to fade back down again. But yes, gap trading is very different. Gap trading is another strategy that we use at Magnetic Trading. Again, kind of it is. It's linked to market function on the basis that where the FTSE closed yesterday, there's been no trade activity. So no buyers and sellers have been matched up. So the market is coming back down to fulfill market function. So again, nothing to do with technical analysis, nothing to do with fundamental analysis. This is, again, focusing on why markets exist in the first place. Target for this, guys, is towards 7,500. 7,500 is where you would close this trade if we get down there. You should have taken half profits, so this trade can no longer result in any loss. I'll show you my gap report as well. Let me just show you a different screen. I'll show you what this was my trade report I put out. Sorry, not that one. This one. So this is, I only had one trade today for our clients, but basically it was about the closing gap. Closing gap, as you know, it's yesterday's closing price down at 74.97. But I was saying we want to target this today, guys, and you want to have a stop of 25 points. So that was really our only trade that we put out. This is before the market opens. We put these reports out. It basically summarizes the trade that we're looking at for the day. But the gap was the only thing I was looking at today. All right, back to the screen. So this may take a bit of time. So we will probably conclude this webinar very shortly. Hello, Farhad. I recognize your name. If I subscribe to Expiry, will that include the live room? No, but we do the live room for the Expiry every month. So it just means that every month you will be in a live room with us trading Expiry with you. No, I don't do Expiry for ASX. It works the best on FTSE. We've tested it on many markets, but it's best on FTSE. Groucho, do you consider a buy once the trade has been closed? No, not today. Not today. I'm expecting a bit of a range bound market this week. Some of you missed the beginning of the presentation, but during the week leading up to expiry, often the markets are range bound, so you don't see breakouts in the market. So it's basically a case of selling the rallies and buying the sell-offs for this week. And then after expiry, you can see the market breakout. How often do we host webinars? It depends, but the next one will probably be in another month, Chris. For these free events, that is. In terms of live trading, we do it every day with our clients. And for the expiry event, as I've said, we do that every month live with our clients. All right, guys. So stops are in. You can't lose on this trade now. Let it do its thing. It's got a bit of breathing room. 7,500, of course, is the target here. If we're stopped out on this trade, I'll just give you another trade that I'm looking at. Let me go to UKX, which hopefully I'll get my, yeah, I will get my screen up. So these blue lines, this was a resistance line from yesterday, and you can see the market came off that precisely. But the next resistance line up, which take a note of, we go on the daily chart, is up at 75.80. So if for any reason we do get up there, I don't think we will, but if we did get up there before Friday, you can look to sell the FTSE and you put your stop above 76.20 and you can target 7,500. This trade, though, is valid 24 hours. Well, sorry, it's valid 24 hours a day up to Friday morning. So don't take it on Friday morning if it hasn't triggered. But basically from now up until Friday morning UK time, you can execute the trade. If we get up to 75.80, just sell the FTSE with a stop above 76.20 and you can target 7,500. That's the next. I don't see it doing much above this level. And again, if it does move higher today, you may just see it break above yesterday's high and fail and then sell off again. Again, because we're expecting range bound action on the FTSE this week. The magnetic blueprint includes expiry, yes, and 8 other trades, Shane. The short term is also included, and you get the live room as well. And if you get blueprint, you get the short term blueprint, the day trading stuff, which is all covers all your gap trading as well. But yes, you do get expiry for that as well. All right. Any further questions for me? Any questions on today's trade? Any questions on what I've been talking about? I'll give you a couple of minutes just to answer. Sorry, to ask me any further questions. Otherwise, we will wrap this up. Okay, guys. Awesome. Well, it's been a pleasure talking to you. Thanks for attending the event. Hopefully you found this interesting. I will join many of you on Friday for the live expiry event. Make sure you join that. 80% chance of it winning. And yeah, if you're still thinking about us, then yeah, we'll probably do another free event in about a month or so. And also, yeah, watch that Bitcoin presentation I did on our free Telegram channel. It delves into currency debasement, and it delves into changes in the stock market. And really, if you've got a super fund, you need to be taking notice of this, because things have changed in the stock market. And if you don't take notice, you're basically going to be losing your hard-earned money is going to be slowly eroded within your super funds over the coming years. And again, the reasons for that are primarily down to currency debasement. No one's talking about currency debasement. All they do is focus on inflation. They don't focus on, you've got to be currency, you've got to stay ahead of currency debasement and inflation. Otherwise, the value of your money is actually becoming less and less and less every year. So definitely take a look at that Bitcoin presentation. It's not just on Bitcoin, it's also about stuff you need to know about stock market changes that are going on. Okay, guys, pleasure talking to you. I'm going to wrap it up now. Have a great day, and I'll join some of you again. And again, targets for the trade that we've done today in the live room, 7,500.